So thank you, Jennifer and Sam, for hosting that. Welcome to Mustafa into Palestine and Ramallah. To the point, first question we'd like to know from you. Tell us a little bit about the specific lighthouse. How did you come to this field and when did you start? Yes.
Thank you all for that incredibly warm welcome. I've been in Ramallah for the past 2 weeks and I'm feeling very welcome here, so thanks again for confirming that you're startup right. So to answer your question, how did Pacific Lighthouse Partners form? Without going too far back, I made an introduction to recruitment about 6 years ago. Before that, I was in a completely different world of media production in Los Angeles. But I became really interested in technology, and a way for me to get exposed to technology was to kind of consult with many different companies. And recruitment was a good fit for me, just in terms of my skill set that I had to deliver. So I spent a year at Michael Page International. You guys might be familiar because they're a global recruitment firm. They're in about 44 countries with about 140 offices, and they were building out a practice in San Francisco. And it was actually my first major corporate job, and of course I had so many disagreements with the kind of practices that they were performing in the company, the need for short-term results in terms of long-term strategic solutions for these firms, and a colleague of mine felt the same way. So it was not too much longer after the year of being there that we started Pacific Lighthouse Partners, and the key focus was to be operating in financial services. And that was largely because my colleague had an extensive 10-year background in financial services, so it made sense to focus on that space. And kind of going back a little bit, our focus was really trying to do things differently than we were experiencing at Michael Page International, which was lack of high touch that we were experiencing, the need to fulfill certain quarterly results without really trying to add the best value to our clients. And there was simply just very questionable practices internally with recruiters that were not in the best interest of the candidates or the clients, but were just in the best interest of the recruitment firm to achieve short-term gains. So we started Pacific Lighthouse Partners and focused on banking, big banking, totally outside of technology. This was around 2013 to 2014, and there was what we didn't know, a huge wave of fintech investment. Right now, fintech investment is about $40 billion globally. And Silicon Valley is, I think, number 3 next to New York and London. So it was a major leader in starting this whole fintech movement. And what we further discovered was there's this incredible talent gap between the traditional side of financial services and the technology side of financial services. Financial services is one of those industries that requires so much technology because it's built on such archaic systems. That's also dominated by major global banks. So how do you find the right leadership within these organizations that do understand the environment, do have the technical expertise, but have the growth mindset of a technology company who can scale fast, who can be less risk averse and have a greater risk appetite, who can actually have a business mindset? And some of the major problems and challenges within fintech has to do with compliance. It is the most highly regulated industry in the world. If you want to scale very quickly in that space, you need to be very strategic and very smart to scale in a way that doesn't really harm your business later on. And there's many examples of that we've seen where companies have been focused on sales and marketing, focused on the technology, and forgetting about the backbone of operations and compliance. And it has really harmed their business. Lending Club's a good example. If you guys are familiar with Lending Club, I can talk a little bit more about Lending Club. So since then, it's been steadily growing our client base in Silicon Valley and focusing on general strategic leadership to help these companies scale. I'll leave it there for the moment, and you can follow up.
Sure. So you started with the corporate and then you moved to Pacific Lighthouse, which is obviously being from the corporate mindset to move to the startup has different mindset, more things to do. Could you tell us a little bit more about it and the obstacles and challenges you faced working in Pacific Lighthouse?
Well, for me, I think there's less of a challenge than most. My family comes from a long line of entrepreneurs, so I've never really been fit for corporate life and was never really interested in the corporate world and working up the corporate ladder. So for me, it was a very comfortable transition and a meaningful transition to go with Pacific Lighthouse Partners. That being said, it of course comes with challenges, right? A steady paycheck at the end of the day is much more comfortable than really building a business and having zero revenue. A really critical part of starting a recruitment business or any consulting business is that, yes, you start it and you start talking to people, you start building the network, you start actually having meaningful conversations, even getting contracts signed. Even if you get a contract signed, it doesn't mean you've actually fulfilled the contract. So we can say that up to 4 months of just pounding the pavement, trying to get business going, trying to get contracts signed, and you don't necessarily get paid until a long wait time after you fulfilled your contract. So there can be a wait time of 9 months of zero money in your pocket. So that's, I think, with many startup challenges has to do with with cash. What is your risk appetite, and of course the mental obstacles that you'll go through in trying to have the confidence to keep persisting and keep going. I think with recruitment, we knew that if we start with one really good candidate and one really good company, and we fulfill that obligation, that promise to the company, then we were okay. It would kind of buy us time, and we can continue to build a network. But I think initially starting out with recruitment, your value add to any company is your network. And when you start with zero network, it really is a strong investment of time to get going. So I think just having the persistence and the faith that if you get to that first key milestone, that first win, and you celebrate that win, then you can continue to celebrate smaller wins after that, growing the momentum.
So speaking of contracts, the start, it's very difficult to close a contract, especially when you're in Palestine. You're young, the big corporates will say, who are you, what's your background, come back again, or they will shut doors at you. I'm sure it's everyone in the world is the same. How would you pass this challenge to convince closing the first contracts? And what are the selling points to give an advice for our entrepreneurs about how to do the business at the beginning, early stage of the company?
It's a really good question. And it's hard to answer for the variety of different business models because every business has its separate value add to a potential client. I think what's just so critical is to be addressing a very urgent need. Our contracts are always signed out of urgency for the client, meaning that they kind of don't have a choice but to sign with us because the need's so important. And with us starting out, it was a little bit different than an average recruitment company, because an average recruitment company will say, Salah, we can find anybody that you're looking for, who do you need, we're very good, here's our track record, here's our credibility. And they say, okay, here's the contract. Ours is a little bit different. Ours was more on the philosophy of showing the client value immediately. So we would say, hi client, hi Salah, I understand that you're working for Startup Grind, and I understand that there's certain talent gaps within your organization right now. Here's a candidate we have exclusive partnership with, and we can set up a phone call with you right now with this guy, and he can grow your business from here to here. So I think in closing these deals is expressing the sense of urgency, expressing the value very clearly and articulately, and that's really what got us going in the initial stages. And then I think credibility can build from there. You build a track record from there. and then we can talk about, how many companies we're working with and how many deals we closed. But starting those conversations isn't always the easiest thing. And outreach, I think, can be done in a very poor way. And I see candidates do this when they're looking for a new job. They're just approaching outreach in the very wrong way. And the biggest mistake I see is that they're focusing on the I and not the you. I'm talking to Salah, and I'm focusing on what what I do and how cool I am, and I'm not focused on particularly his needs. That's all that he cares about. So, with starting these conversations in the very beginning, it was really just having open dialogues with leaders within the space, without a particular incentive to close a deal right then and there, but really a way to express and promote my value into the marketplace. And when you do that, you experience that a lot of these leaders are pretty open to helping and want to help, and sometimes they don't realize that they could actually use your help. Though if I approach them in the wrong, with the wrong type of message, maybe they wouldn't be open for the conversation. So that's what I think.
So, a little bit about fintech. Could you tell us a little bit about the opportunities and challenges generally in the fintech industry from your perspective coming from the San Francisco area?
And not from a talent perspective, but from more of a company perspective, new companies, the challenges in growing companies. Well, in Silicon Valley, there's a really big talent war happening in Silicon Valley. So growing a company in Silicon Valley is very challenging, or any technology company for that in Silicon Valley, because the prices to operate in Silicon Valley are so incredibly high. Peter Thiel, co-founder of PayPal, also an early stage investor in Facebook, he's actually relocated his capital fund down to Los Angeles because his argument was that when he invests in a startup, half the money invested is going towards landlords and not actually towards the creativity and technology of the business. So there's an extreme talent war going on in Silicon Valley where it's really tough to retain talent, especially if you're on a low budget. Salaries are becoming incredibly inflated. Talent moves from one place to another very quickly. People, once they've got some investing in a particular company, they go into the next technology company. So talent's a big problem. I think compliance is an enormous problem. And with compliance being a huge problem, depending on what space you're operating in. Or we could take cryptocurrency as an example, because everyone likes to talk about cryptocurrency nowadays. That's a very obscure space in terms of regulation. Governments don't know how to regulate cryptocurrency. Actually, government agencies don't even understand cryptocurrency. What's really important for these cryptocurrency companies is to have the proper compliance people in-house so they can educate the government agencies on how it works. And so they can be proactive in actually influencing policy making in DC and otherwise. So compliance is huge, especially because fintech in general is new and governments aren't sure on how to regulate it. I guess 3 would be competition. The biggest area of fintech that we've operated in is in lending. And now it's so common for a company to want to enter the lending space. There's Lending Club, there's SoFi, there's LendUp, there's numerous companies following in their footsteps, and we're also seeing companies that have been around for a long time now want to build a lending arm of the business. If you're familiar with Square, the payment system, they've recently started a small business lending arm of their business. Not many people know about this, but it makes perfect sense because Square already has access to all their kind of financial information, at least from the front end of the POS. So they can determine quite easily and quite quickly what kind of loan they can give them, how much, at what rate, and it could be just a really smooth engine lending machine. And so competition is really tough. And cryptocurrency obviously is incredibly confusing and competitive space as well. So I think those things are what make it tough, I'd say.
Well, cryptocurrency, great topic. Everybody's talking about now, especially blockchain, cryptocurrency, and what are the differences. Could you tell us a little bit? I mean, I've been to San Francisco. I saw how people are now looking at having ATMs to go and withdraw Bitcoin money and people do exchanges in the streets. Could you tell us a little bit about the differences between what is a cryptocurrency and what is the blockchain, and how can fintech benefit from the blockchain in building projects, building fintech products as well?
Now, this one I can't really. I would feel. I wouldn't feel good about trying to answer this question because, truthfully, I don't know the technical nuances of cryptocurrency. And honestly, within the fintech space, cryptocurrency has not been a major focus of ours. It's relatively new. When you look at actual venture capital investment into cryptocurrency companies, it's actually not that large. There's exceptions like Ripple and Coinbase, who we've worked with for compliance reasons. For me, it's really hard to understand the actual application of cryptocurrency into daily life. It seems to me that the investment into companies and the money that you're seeing moved around with cryptocurrency is more trading cryptocurrency, not actually using cryptocurrency as currency. It's more of speculative assets that people are buying into. And this, from what I know about blockchain, it seems like the technology itself is certainly the future. It just makes too much sense. It's too efficient, and things have been so efficient for so long, and it doesn't make sense to pay all these unnecessary fees. So the technology itself, I think with me, when I think about cryptocurrency, I also think about how it's actually going to be applied as a potential universal currency. Is it decentralized where Palestine uses this particular cryptocurrency and the US uses this cryptocurrency, or is it Bitcoin being locked up in the vault like the new gold standard? This is very unsure, and I kind of have suspicions of a potential bubble with all this cryptocurrency activity because no one's really talking about the actual application and its relation to fiat currency, which is our current system. Because it might make sense more, in my view, to incorporate blockchain technology with an actual gold-backed system or some sort of tangible asset system, as opposed to having this kind of fiat system where there's no actual intrinsic value behind Bitcoin. It's more kind of software that's created. So not exactly answering your question, but I just wanted to kind of express my views on the cryptocurrency market because I think it's so interesting and confusing and unsure of where it's going to go. So hopefully that can lead to a discussion.
Fine, but I still have a question for you about cryptocurrency. And before we start with the starting line, you mentioned that you have not a good view about it, right? Or put it this way. Could you tell us more? Because cryptocurrency, no one knows the future of cryptocurrency. We don't know where it's going. It's like we're talking about the internet when the internet was not there for the 80s maybe. No one have ever thought that we use internet to navigate or to communicate via video or radio. Same thing with cryptocurrency. No one have ever thought that you would send money from one place to another in less than 1 second and not use Swift technology and all of that. Could you tell us what's the reason behind you don't believe in it?
And I wouldn't say it's I don't believe in it. I just think a lot of people are perceiving it in the wrong way. And I get a sense of a bubble when I hear like my mother and their neighbors all talking about cryptocurrency and investing in cryptocurrency. That's what kind of concerns me because everyone's seeing it as an asset. And we've seen Bitcoin grow from 4,000 to 20,000 in the span of like 6 months maybe, and now it's back down to almost below 6,000. And you can understand that if everyone and their mother are investing in Bitcoin, at $10,000, how much are they really putting on the line to make these investments? Are they taking out loans? Are they borrowing money from their friends? Are they using all their savings to invest in this? And now it's all gone. And you can imagine how much money the market needed to raise an asset from 4,000 to 20,000. That's a lot of money for that growth to happen. And now that it's gone down, a lot of these people that lost so much money are going to want to sell again once if they invested at 15,000, when it gets to 10,000, they might want to sell, so it's they don't take such a huge loss. So you can imagine how much additional money is going to need to go into the Bitcoin space in order for it to go back to 20,000. But meanwhile, everybody talks about it going up to 100,000 and 200,000 and however much time. So there's the sense of FOMO, we call it, fear of missing out, that I feel like is driving a lot of the cryptocurrency market. And I think there is, at some degree, an element to that. There has to be. In addition, I have a lot of critique on the current fiat currency system, where governments essentially print money out of thin air, and then they create these sort of debt, financial instruments that China buys, and that's why America, has trillions of dollars of debt. And so it's kind of propping up the appeal as a really strong economy, but how are you really having a strong economy when you have this much debt? So I think there's opportunities for blockchain to replace this, what I see to be a broken system of fiat currency, where you're seeing Italy in debt and countries all around the world in debt, states in debt, because they have the freedom to basically print money. And that, I think, is going to be a significant problem in the global bond market in the future. So I think it presents opportunities for cryptocurrency, but I think just replacing the broken fiat currency with a new technology-driven fiat currency isn't necessarily the best solution. In addition, so you've heard these stories about someone invested in Bitcoin and then they won $5 million, but then they forgot the code to get it out of the bank. So the whole idea behind cryptocurrency was like, hey, we want to take power away from the big banks, let's put it in the power of the people. But are people responsible enough to, hold on to their own money and keep these codes? Is there really going to be no third-party system? Is that realistic? I'm a little bit doubtful of that. I think eventually there's got to be a third-party system. And this is actually why I like Ripple a lot, because Ripple is actually using blockchain technology in the banking and corporate environment to do corporate transfers, essentially. You probably know more of the technical piece than that, but that's kind of how I understand it from a broad view. And that makes more sense to actually apply the blockchain technology in a real economic environment, as opposed to make it just a trading commodity. Though I do wish I bought Ripple last year, because it went up like 35,000%. Along with other cryptocurrencies, I think I missed out on some of the investment on it. But yeah, so I think there's a lot of concerns to be had, and I fear that a lot of people aren't talking about it because there's so much kind of cultish behavior around cryptocurrency. Everyone wants to believe it's the future, it's the future, it's the future, and they don't want to actually address any of the major issues with it.
Very interesting analysis. From your working with companies in the fintech area in the States, could you give us a little bit of the analysis of the business models of these companies for us to learn more?
So I think the largest part of our client base was based on financial inclusion oriented business models. One that I've just recently closed a deal with is called Wealthfront. Anybody know Wealthfront? Wealthfront? Anybody know Betterment out of New York City? This is the space of robo-advising. So robo-advising, if you're not familiar, it's essentially software-enabled investing. Investment advice. So in the past, achieving really good financial